Want help to grow your business? Download Bryn, the world's first business advisor in your pocket. To find out more, visit bryn.ai or search the App Store today.
Hello and welcome to Empire Builders. If you want to make money from property, you can't just buy any old property and hope for the best. You've got to have a strategy. Joining me today on the show is one of the country's best performing mortgage brokers, now personal investor and advisor to other property investors. Please welcome John Mancinelli from Hunterwood Solutions. Good to see you, John. Thanks for joining us.
Chris. Thank you. Thank you so much for having me on the show.
Now, obviously, as part of the strategy, you can't just buy at any old time. There's a thing called the property clock. So, do you want to explain to the viewers exactly what the property clock is and how it all works?
The property clock is a wonderful principle that allows investors to look at buying at the right time of the cycle. Now, we've both discussed that it's important to, it's how long you stay in the cycle, but I want to get back to some basics that served investors very well over the centuries. And what we have is this concept where we're trying to encourage investors to buy at the right time of the cycle, that is at the bottom of the cycle rather at the top. Now, the media is a wonderful thing, Chris. As you know, the media can essentially stimulate you to be buying for fear of missing out or not buy because the world's going to end. And so if we look at the top of the cycle at 12 o'clock, we can see that there's rapidly rising prices. And so the principle there is to say, hang on a second, do I really want to be following the herd and paying over the odds? And conversely, you have at 6 o'clock at the bottom of the cycle is when we have falling real prices. And that's where I've seen the most astute investors make their money. You want to be buying when no one's buying.
And that's the thing, is it's all being about contrarian, isn't it? Because everyone wants the comfort to know that their neighbours are doing it, their parents, their friends, everyone's giving you the confidence, and so they're all buying at 12 o'clock.
And what happens? You end up paying over the odds, and you may be foregoing the opportunity cost of all the capital growth that's moving forward. And so the best time to be buying is not when all your friends are buying, but when everyone else is selling. And so as a mortgage broker, I've seen some remarkable deals being done when the world apparently was going to end. So if we go back to the GFC, straight after the GFC, there was some amazing opportunities and some transfer of wealth that I saw that bodes well. So, your friend is the trend, and if you buy between 6 and 9 o'clock, you can really notice that there is rising yields, there's an undersupply, and there's falling interest rates. That's the ideal time to be buying. And so be wary of what you read in the newspaper, no matter where you are in the world. It's a global context where you can say to yourself, yes, I am buying at the right time of the cycle, I can find a deal, and I'm not paying over the odds. The last thing you want to do is, be buying at the right time, the wrong time of the cycle.
So if effectively at 12 o'clock, this is when the whole herd is happening, and it's happening at a lot of kind of places around the world at the moment, I guess the danger is when is it suddenly going to turn down? Because how long could that cycle be at 12 o'clock? Could it be 3 or 4 years, for instance?
And no one really knows that. There's a number of factors that would help determine how long that cycle is. So the 4 key macro drivers: supply and demand. It comes down to supply and demand. It comes down to infrastructure spending. It comes down to demographics, and it comes down to economics and employment. So what we're trying to look for is these 4 key drivers that help understand how the property clock is working. So wherever you are in the world, if you can put those 4 guiding principles, and we'll expand on those in a moment, it'll give you an understanding of where your country is, where your city is, and where your suburb is. And
so if you know you're at 12 o'clock, is there a guarantee that prices always fall after that?
Not necessarily. Again, it depends on the country and the jurisdiction that you're in. Now, obviously, there will be a lot of places where you're buying at the peak of the market, and for whatever reason, there's been an event that will cause prices to drop. But the main thing is, if you can study history, and you can see that there are some places in the world where what it does is it peaks, and then it goes sideways. And that's not everywhere. But in certain countries and jurisdictions, you will find that there will be growth and then sideways movement. And the other thing too to notice is that as the cities and the suburbs in that clock moves around, it doesn't necessarily move it chronologically. All right.
So does that mean you've still got to kind of take everything with a pinch of salt, that suddenly if you have interest rates dropping when it's not necessarily the right time on the clock, then you've got to read into other things?
Yeah, so I touched on, for example, is there been a massive oversupply of construction? So if we look at 11 o'clock on the property clock, where you see rising construction, does that necessarily mean that it's the time to be buying? because the last thing you want to do is buy an investment and you can't tenant it out. So low interest rates may stimulate the purchase of that property, but you want to make sure that you can find a tenant as well.
So if it doesn't always go in that same order, how do you work out if you're at the top or the bottom?
Good question, Chris. I don't know. I wouldn't be here if I knew that. No, in all honesty, it's very hard, as you know, to predict the top of the cycle and the bottom of the cycle. But there are some key things that you can keep a lookout for. And so if we look at the top of the cycle, you're typically seeing rapidly rising prices. You will typically see a herd mentality. If the front pages of the newspaper and the media are saying, prices are booming, then that's starting to be a sign saying, hang on a second, do I want to be competing with other buyers? The other one is at the bottom of the cycle, if you're seeing falling construction, like there at 5 o'clock, and you're seeing rising yields, okay? Then that might be an opportunity to say, you know what, this is probably the time that I can step in and buy well.
So what are some of the other factors that you need to look for?
Okay, so universally there are 4 key macro drivers to look for when it comes to investing. The first one is a simple thing called supply and demand. Okay, we want serious demand and not enough supply. So no matter where you are in the world, it's a common economics 101. Is there more demand than supply in that particular country, city or suburb? The second one that you want to look for is economics and employment. Is the area you're buying into, has it got the depth and the breadth to provide jobs and therefore borrowing to get into the investment property market, okay? The third one is infrastructure spending. I call it the holy grail of capital price growth. Whenever you see a new railway or a new hospital or some sort of government stimulus, or it can even be private stimulus, you'll typically find a gentrification of that suburb. So I'd encourage viewers to really look at their area or parts of their country where you're seeing the government spending money on underground tunnels or new hospitals and buying around those locations. And then finally, looking at demographics. So where is that area that's gone from really hard labour to a cafe culture society? Where are the hipsters? And where is the concentration of the wealth starting to happen? So you may have an older working class suburb that is now slowly becoming a lot more gentrified. And so that's typically where you see cafes starting to move in, or recreational facilities like movies and restaurants and things like that. So there are 4 key drivers there.
And so obviously where you go around a specific country, then there's going to be different cycles going on in different areas. And again, a lot of it's probably going to be price point driven as well, isn't it? So potentially if you're around the median price, or say within 10 or 20% of that, would that generally give you more stability, for instance?
Oh, that's a really good point. A lot of viewers may be of the belief that you should be buying at the top end of the cycle, the top end of the price point. Then, that's a great thing for a trophy home. Maybe it's your own home. However, as you know, Chris, what you're trying to do is be attractive to that middle group of people that can afford to rent from you, or as they grow in wealth, can afford to buy from you down the track. And so you'll typically get better yields. You'll be able to appeal to a wider audience. And the great thing is that these sorts of suburbs will appear on the radar as time passes from those 4 different macro drivers that I mentioned. And each city within your country and each suburb within those cities have their own time in the cycle.
Now, how much of an expert do you need to be for this stuff? So if you're really trying to predict the market and predict where the train lines are going in, or whatever government spending's happening, what if it doesn't happen? Is it like day trading in a way, like on the stock market, versus I'm going to buy for 30 years and hold on?
Yeah, look, I've always believed in outsourcing as much as you can to the experts. So a buyer's agent, wherever you are in the world, is a great place to start. Some people see buyer's agents as an expense. I see them as an absolute investment. I'd encourage the viewers to work on their businesses, to focus on what you're doing, and then outsource it to a buyer's agent if you can. I don't try and do all the taxes myself. I get an accountant to do it. When I'm sick, I don't try and go to Dr. Google and work out when I'm, sick. I will go to the experts. Now, if for some reason you can't do that, there's plenty, in this online world, there are plenty of resources to help you understand where to buy. So, for example, it's very easy nowadays to find out where governments is putting in those new train lines. And you've got to be very careful, because what's being planned and what's being funded is extremely important to work out. In certain parts of the world, the governments will play politics and they'll make a wonderful announcement because they want to get voted in. But what you want to make sure is funded. That's the key word. funded.
And so this is the thing, is there's a lot more statistics and analysis that goes behind the scene, rather than saying, right, let's pick this off the internet or pick it off the TV show. Right, okay, I can see a couple of these things. Oh, right, the economy must be flying. Because again, there's always exceptions to the rule, isn't there?
Statistics, and there's lies and lies. Yeah. Look, what you're looking for is the overall picture. So, when you see infrastructure spending and you're seeing announcements, that's one part of it. But fundamentally, have we got supply and demand imbalances in there? So do we know that there's going to be lots of people moving in there and typically demanding those types of properties? So whilst we're talking about infrastructure spending, I really encourage the viewers to break it down into those 4 key macro drivers. Has that hospital been funded? Has that hospital then going to drive the cafes and create a gentrification in that area? Is the population going to start moving in there, all the nurses and the doctors and all those sorts of things? And then finally, are we seeing a demographic shift where we're seeing the incomes of those areas moving from X amount of dollars to X plus 1 amount of dollars? So in 10 years' time, you can either sell it at a capital gain or increase the rent on that property over time.
So certainly when it comes
To continue enjoying this presentation, download Bryn, the world's first business advisor in your pocket. To find out more, visit bryn.ai or search the App Store today.